All right, let's get right into this because what's happening in Florida right now is genuinely unprecedented in modern American history. We're watching a complete implosion of one of the largest real estate markets in the country, and the governor who's supposed to be managing the crisis has completely lost control. DeSantis is reportedly in full panic mode, unable to stop the cascading failures, watching helplessly as the market destroys itself despite everything he tries. This is what loss of control looks like at the state government level, and it's terrifying for everyone involved. Let's start by defining what implosion means in this context, because this isn't just a correction or a downer. An implosion is when a system collapses inward on itself, when all the supporting structures fail simultaneously, when the decline becomes self-reinforcing and unstoppable. And that's exactly what's happening to Florida's real estate market right now. Sales volumes have collapsed. Prices are in free fall in many areas. The insurance market has disintegrated. Financing is dried up. Foreclosures are spiking. Construction has stopped. Investment has fled. Every component of the real estate ecosystem is failing at the same time, each failure making the others worse. Let me give you some specific numbers to show just how catastrophic this implosion is. Sales transactions in Florida are down 40 to 50% or more in many markets compared to peak levels. That's not a slowdown, that's a collapse. In some of the hardest hit areas, sales are down 60 or 70%. Homes that would have sold in days 2 years ago now sit on the market for 6 months or more with no viable offers. The market has essentially frozen. Inventory has exploded. The number of homes for sale has more than doubled in many Florida markets. Sellers are desperate, dropping prices repeatedly, but buyers aren't coming. Why? Because the total cost of ownership is prohibitive. Even with prices down 20 or 30% from peak, buyers can't afford homes when insurance is $25,000 a year and financing is expensive and uncertain. Days on market have skyrocketed. Properties are sitting unsold for 100, 150, 200 days or more. This is devastating for sellers who need to move, who have already bought another property, who are carrying 2 mortgages, who are facing foreclosure. The inability to sell is trapping people and forcing desperate price cuts that drive the market down further. Price reductions are everywhere. In many Florida markets, 40, 50, 60% or more of active listings have had price reductions, often multiple reductions. Sellers list at what they hope to get no offers, drop the price, still get no offers, drop again. Some properties have been reduced 20 or 30% from the original listing price and still aren't selling. This is a clear sign of a market in free fall. And the quality of the inventory tells a story too. Increasingly, the homes on the market are distressed properties, foreclosures, short sales, homes that need major repairs, properties in areas with the highest insurance costs or climate risk. The good properties in desirable low-risk areas sell if they're priced aggressively enough. Everything else just sits. New construction has collapsed. Housing starts in Florida are down dramatically. Builders who were scrambling to keep up with demand 2 years ago are now canceling projects, walking away from land purchases, laying off workers by the thousands. Why would a builder construct homes they can't sell? The economics don't work. And when construction stops, it eliminates jobs, which reduces buyer demand, which drives the market down further. Investment activity has evaporated. The institutional investors and large landlords who were buying aggressively in Florida are now either sitting on the sidelines or actively trying to exit. Some are dumping properties at a loss just to get out before things get worse. When the smart money is running away, that tells you how bad the situation is. The rental market is suffering too, which surprises some people who thought landlords would benefit from homeownership becoming unaffordable. But rental property owners in Florida are getting crushed by insurance costs just like homeowners. When your insurance on a rental property goes from $5,000 to $20,000 a year, you try to pass that cost to tenants through rent increases. But tenants can't afford massive rent increases either. So landlords are caught between soaring expenses and tenants who can't pay more. Some are selling at a loss. Others are defaulting on mortgages. The rental market is imploding too. Commercial real estate in Florida is also in crisis. Office buildings have high vacancy rates as companies downsize or go remote. Retail properties are struggling as consumer spending declines. Hotels and vacation rentals face soaring insurance costs and declining tourism. The implosion isn't limited to residential real estate. It's affecting all property types. And DeSantis has completely lost control. He's tried multiple interventions and nothing is working. He called special legislative sessions. He passed insurance reforms that didn't reform anything. He tried to reassure markets that Florida is fine. He attacked critics and blamed external factors. He begged for federal help while simultaneously criticizing federal government. Nothing he's done has stopped or even slowed the implosion. The market is beyond his control now. What does loss of control actually look like? It looks like a governor who thought he had all the answers, discovering he doesn't. It looks like policies that fail to achieve their stated objectives. It looks like events spiraling beyond the ability of state government to manage them. It looks like panic behind closed doors while maintaining a false front of confidence publicly. It looks like a political leader watching his legacy crumble in real time. Reports from inside the DeSantis administration paint a picture of chaos and finger-pointing. Staff are reportedly demoralized, knowing that nothing they're doing is working. Different factions are blaming each other for the crisis. DeSantis himself is reportedly furious, lashing out at advisors, demanding solutions that don't exist, refusing to accept that his own policies created this disaster. The insurance crisis, which is the primary driver of the real estate implosion, is completely out of DeSantis' control. Citizens Property Insurance, the state-backed insurer, is drowning. It's covering over 1.4 million properties with inadequate reserves. Private insurers continue fleeing. The few that remain charge astronomical rates. DeSantis has tried everything within his ideological comfort zone to fix insurance, and nothing has worked because the fundamental problem is climate risk, which he refuses to acknowledge. Without functional insurance, you cannot have a functional real estate market. You can't get mortgages without insurance. You can't sell homes without insurance. You can't even safely own a home without insurance. The insurance market has imploded, taking the real estate market down with it. And DeSantis has no answer for how to fix it, because fixing it would require acknowledging climate change and implementing massive government intervention, both of which are politically unacceptable to him. The climate reality that DeSantis spent years denying is now undeniable. Sea levels are rising. Hurricanes are intensifying. Flooding is worsening. Coastal erosion is accelerating. These aren't future threats. They're current realities affecting property values and insurability right now. Buyers are starting to factor climate risk into purchase decisions, which means vulnerable properties are losing value faster than protected ones. The market is repricing risk, and that repricing is destroying values across coastal Florida. DeSantis banned state employees from saying climate change, as if denying reality would make it go away. But reality doesn't care about political spin. Insurance companies price risk based on data, not ideology. And the data says Florida is becoming increasingly risky and expensive to insure. No amount of denial changes that. The fiscal implications of the real estate implosion are devastating for Florida. Property taxes are the primary revenue source for local governments. When property values crash, tax revenues crater. Local governments across Florida are facing fiscal emergencies. They're cutting services, laying off workers, deferring infrastructure maintenance, raising millage rates. These cuts make areas less desirable, which drives values down more, which cuts revenue more. It's a death spiral. State revenues are also affected. Transfer taxes on property sales have plummeted as transaction volume collapsed. Sales tax revenue is declining as real estate-related spending disappears. The construction industry employed hundreds of thousands of Floridians and generated enormous tax revenue. As construction implodes, the state loses jobs and revenue simultaneously. The wealth destruction is staggering. Florida homeowners have lost hundreds of billions of dollars in equity as values have crashed. That's wealth that families were counting on for retirement, for emergencies, for their children's future. It's just gone, evaporated in the implosion. This will have generational consequences for Florida families. The banking and financial sector is at risk too. Florida banks and credit unions have enormous exposure to real estate. As defaults increase and collateral values fall, banks face losses. Some smaller institutions could fail. Even larger banks will see profits decline and lending capacity constrained. This creates a credit crunch that makes recovery even harder. Let's talk about specific areas and how the implosion is affecting them differently. Miami, which was one of the hottest markets in America, has seen an absolutely brutal reversal. Luxury condo market has collapsed. Properties that were selling for millions are now sitting unsold with repeated price cuts. Foreign buyers who drove much of Miami's market have disappeared. Insurance costs are prohibitive. The downtown condo market is in crisis, with many buildings having multiple units for sale and no buyers. Tampa Bay has been devastated by the combination of Hurricane Ian damage, insurance crisis, and now the broader market implosion. Some neighborhoods still haven't recovered from the storm. Values have crashed. Sales have dried up. Foreclosures are everywhere. Parts of Tampa Bay are starting to look like they did after the 2008 crash, with vacant homes and struggling neighborhoods. Orlando's market implosion is particularly painful because it was fueled so heavily by investor activity. When investors were buying aggressively, prices soared. Now investors are trying to exit, flooding the market with inventory, and there aren't enough buyers. Prices are falling fast. Rental properties that were supposed to generate positive cash flow are losing money due to insurance costs. Southwest Florida, including Fort Myers, Naples, and Sarasota, is facing the full force of hurricane risk repricing. Properties that were worth millions are now worth far less because buyers are factoring in the very real possibility of catastrophic hurricane damage. Insurance is either unavailable or costs more than most mortgages. The market in Southwest Florida has essentially seized up. Jacksonville and Northeast Florida are suffering from the broader economic malaise, even though they face less direct hurricane risk than other areas. When the state economy is in crisis, everywhere suffers. Foreclosures are up. Values are down. The market is stagnant. Even the Panhandle, which had been recovering from Hurricane Michael, is now facing a new crisis as the broader market implosion spreads. Properties that were rebuilt after Michael are now underwater financially. Insurance costs are prohibitive. The recovery that was underway has stalled. What's particularly devastating is that there's no easy fix, no single policy change that will stop the implosion. This is a systemic crisis caused by years of policy failures, climate change, unsustainable speculation, and regulatory capture. Fixing it would require a comprehensive overhaul of insurance regulation, massive investment in climate adaptation, restrictions on vulnerable development, economic restructuring, and probably federal assistance. That's a decades-long undertaking, not something that can be fixed with one bill or one program. DeSantis doesn't have decades. He's watching his political legacy implode along with the real estate market. He built his brand on Florida being successful. He ran for president claiming Florida was the model for America. Now Florida is a cautionary tale about what happens when you ignore science, deny reality, prioritize ideology over pragmatism, and let market failures go unaddressed until they become catastrophic. The human cost is what should matter most, but gets lost in the numbers. Every percentage point decline in values represents real families losing real money. Every foreclosure is a family losing their home. Every failed sale is someone trapped, unable to move for a job or be near family. Every canceled construction project is workers losing livelihoods. Every closed real estate office is agents who built careers watching them disappear. The pain is enormous and widespread. For anyone watching this who has Florida real estate exposure, you need to be realistic about the situation. The implosion is ongoing. It's going to get worse before it gets better. Property values will likely continue falling for at least another year, maybe longer.